What's up guys, Omar here, broker and CEO of Alden Mortgage and Ome Realty. So we're gonna go ahead and go with the mortgage rate update, and it's going up again. It's going up. We're also gonna talk about, and this is a speculative thing, which I was speculating a long time ago, previously last year, that I thought that mortgage rates and the demand and then the supply chain and everything that happened as far as homes being readily available has been correlated with the total of price that lumber and all other material goods as far as building goods has increased, and it actually has. Decreased. I'm so sorry. Decreased. It's been the lowest in the past 9 months. We're going to talk about that. We're also going to talk about what I actually look at, and which majority of people in the mortgaging industry, what we look at as far as, you know, the 30-year mortgage-backed securities. We look at the 30-year yield, the 10-year, the T-note, and then also the 10 cities that have already taken a hit. Yeah, we've already started a decline, and one of them, it's actually a double-digit number. Almost 20% has decreased, but let's go ahead and go on with the mortgage rate update. This is gonna be as of 6/9/2022. We're gonna be pricing out 5 different mortgaging products. It's gonna be a 30-year fixed, a 15-year fixed, a 30-year FHA, a 30-year jumbo, and a 5/1 adjustable rate mortgage. And if you don't know what a 5/1 adjustable rate mortgage is by now, it is fixed interest only for 5 years. Then it gets adjusted every single year according to the rate and the cap on your product. And I was actually thinking, did you guys want me to go ahead and send prices out for, let's say, a debt service covered ratio loan for investors, bank statement loans, or any other loans, hard money loans, all that other stuff? You want me to add a couple more on there? If you do, just comment below and let me know, and I'll be more than happy to go ahead and chime in another 3 or 4 more in there, or maybe even take away. No, I think these are pretty good. So 30-year fixed is going to be sitting at 5.55%, which is actually a 0.06% increase from 1 day ago, 0.12% increase from 1 week ago, 0.03% increase from 1 month ago, and 2.47% increase from 1 year ago. 15-year fixed will be sitting at 4.88%. That is 0.05% increase from 1 day ago, 0.09% increase from 1 week ago, 0.06% increase from 1 month ago, and 2.39% increase from 1 year ago. 30-year FHA will be sitting at 5.12%. That is 0.14% increase from 1 day ago, 0.22% increase from 1 week ago, no change from 1 month ago, and 2.49% increase from 1 year ago. 30-year jumbo will be sitting at 4.79%. That is 0.06% increase from 1 day ago, 0.09% increase from 1 week ago, 0.04% increase from 1 month ago, and 1.66% increase from 1 year ago. 5/1 adjustable rate mortgage will be sitting at 4.70%. That is 0.08% increase from 1 day ago, 0.15% increase from 1 week ago, 0.05% increase from 1 month ago, and 2.45% increase from 1 year ago. So as you've noticed, well, actually you wouldn't notice because it's a recent thing, lumber prices just hit their lowest price point in the last 9 months. Now this is going to be a speculative thing that, you know, whenever something doesn't seem right? If it walks like a dog, duck talks like a duck, it might as well be a duck. I speculated that the whole entire industry as far as lumber shortages goes was just something derived off of the need to go ahead and do more building, which influxed the cost. What do I mean by that? I feel like lumber companies were actually holding back the total of lumber that they were actually producing, which was creating the supply and demand chain that was increasing the total prices, because I know that there's a couple of big builders that actually own their own lumber company. Mainly the one that I just bought. Toll Brothers, they own their own company. They didn't have any of these problems. They were on time. Everything was spick and span. We didn't have any delays. Those dudes knew exactly what they're doing. But lumber prices just hit their lowest point in the last 9 months because mortgage demands sink to the levels not seen in over 2 decades. In 2 decades, over 22 years, this is going to be the highest or the lowest level of mortgage demand and mortgage applications in the last 22 years, because interest rates suck and home prices suck. Everything sucks. And I'm going to tell you firsthand, it sucks for me. I am a mortgage and broker. I'm a broker for real estate and mortgaging. My life freaking sucks right now. I am so bored. I don't know what to do with my life. I just twiddle my thumbs because all I do is I make calls after calls after calls after calls after calls, and it's not like we can't get any business. Of course we could get business, but the problem is that I can't qualify a lot of people, especially here in California. Southern California, Los Angeles, San Francisco, San Diego, Orange County, you know, just people are not able to get qualified. So the lumber prices has hit its lowest price in over 9 months. Lumber prices can't catch a break, having dropped another 4% on Wednesday to hit their lowest level in 9 months. Now that's also because a lot of these developers are actually pulling back. They're not actually building as fast anymore because they don't want to be overly exposed as they were back in 2008, where they were just building and building and building, and they had a surplus of inventory rather than having the home sold. So what new developments are actually doing is, what they do is they go ahead and get you to put a deposit on the house, and once they put a deposit, they won't start construction until they actually sold the place, aside from their models. Before, they were just building and building and building. They didn't give a shit about anything. A traditional 30-year fixed mortgage saw an average rate rise to about 5.4%, and as you saw, we are actually at 5.55% as of today. This was from yesterday, and interest rates increase sometimes really by hour. Mortgage applications fell 7% over the past week, which has actually been a 21% year-over-year decline as of that. One home builder in Denver summarized the driving force behind the housing slowdown as higher rates are definitely bringing a chill to the market, which everybody knows. It doesn't take a rocket science to figure out. Once you increase the total cost of buying power will decrease, motherfucker. So what we actually look at whenever we're looking at to kind of project to see where we're going is we look at something that gets sold in the secondary market, which is your mortgage, the thing that you use to go out and purchase your house for the most part, which is called a UMBS. It's a 30-year mortgage. Now, if you look at, I'm going to pop up this little graph right here. You could go ahead and take a look at it. We are taking a big dump. The mortgage-backed securities are taking a big hit because nobody wants them anymore. They don't want to go ahead and buy these bonds. So when nobody wants to buy these bonds and there's not enough stimulus when the feds go ahead and increase interest rates, this seems uncertain to a lot of people. So what they do is they just dump it and let it go. This is going to be the 52-week range high, and as if you could see, right when January 2022 hit, atomic bomb, that's what ended up happening. And at the same time, I'm going to go ahead and pop up the 30-year Treasury, the 30-year, and then we have the 10-year. As you see, the 30-year Treasury is actually starting to increase as of, you know, I have this from July 2021. It took a massive increase over as soon as January 22 hit. And surprisingly, the MBS was the same thing. It decreased right afterwards. And I'm put the 10-year T-note. That also has increased. Surprise, surprise. Now, in some cities, the decline has already become. So here are the prices of the 10 cities according to realtor.com, and then I went ahead and double checked on that as much as I can because I'm not licensed in all of these states. I'm only licensed in California, and then we do lend in other in other states as far as non-qualified mortgages go. You know, we have New York, we have Florida, Texas, Nevada, Arizona. We have a few other states that we do on the non-QM side, and non-QM side is something that is not purchased by Fannie Mae or Freddie Mac. Those are the biggest ones. But the 10 cities that already took a hit. Now we're going to go ahead and start with number 10 at Richmond, Virginia, who took a 3.4% decrease in hit. Chicago took a 3.7% hit. Memphis, Tennessee has taken a 4.6%. LA, my area, has taken a 5% hit. We are now under the $1 million threshold. Tulsa, Oklahoma took a 5% hit. Springfield, Massachusetts has taken a 5.8% hit. Pittsburgh, 13.7%. PA, Detroit, Michigan took a 15.4% hit. Rochester, New York has taken a 17% hit. And then number 1 is going to be Toledo, Ohio, that has taken an 18.7% hit as far as real estate home prices go. So that is going to be your mortgage rate update. And for up to 50% commission rebate, 0% listing on selling your current home, or any mortgaging assistance, link in the description below. And if you like the content, like, subscribe, comment, all that other good stuff. And by the way, if you didn't watch my last video, Target is liquidating a bunch of their stuff. They're trying to sell all their pandemic stuff, which is like, you know, your comfy everyday clothes where you're just sitting at home, like what I'm kind of wearing on a daily basis because I work from home for the most part. It doesn't make sense to go back. I don't feel like going and sit in traffic. I don't feel like getting another office space. It just doesn't make sense. But they're getting rid of a bunch of their stuff. Their TVs are on sale. Best Buy is doing it same too. So if you want to, go to Best Buy, go check those guys out. Check out a lot of these companies because they're trying to dump off a lot of things. Now, they're saying that it's from pandemic stuff, right? It's not pandemic stuff. Everybody is preparing themselves for the inevitable. and the inevitable is going to be a catastrophic time that's about to hit us like we have never seen before. That's speculative. I hope to God I'm wrong. I pray to God that I'm wrong. I don't want to be right. I definitely want to be wrong. But it is what it is. Until next video, guys. Peace.
I don't wanna waste a minute. Don't have any plans, wing it. If you got a glass, fill it, cause I need it now. Money is a in it. I don't wanna think about it. So if you know the song, sing it, cause I need it now. Take me to a place where the music's loud. I don't wanna think right now. Flashing lights running through the crowd. I don't ever wanna stop. So let's get out. Let's get out. I got money in my pocket and I'm about to f***ing drop it with you now. With you now. Tear the roof off every building. I know I'll be spending millions with you. Just tell me what you wanna do. So let's get out. Let's get out. I got money in my pocket and I'm about to spend it all. I don't wanna waste a minute. Don't have many plans, wing it. If you got a glass, fill it, cause I need it now. Money is a in it. I don't wanna think about it. So if you know the song, sing it, cause I need it